everybody. This is Dr. William Jones coming to you from the offices of the Future Millionaire Investor Alliance. Today's topic is why most traders lose, and it's not what you think. But the first thing we want to do is go over the trade that we anticipated yesterday that ended up being a profitable trade. And guys, if you're on the line, you can speak freely because we'll talk. This is just open dialogue. But what we have here in the trade that we took yesterday on the Aussie dollar was we were looking at a 4-hour chart, 30-minute chart, and a 5-minute chart. Okay. Well, the way price flow analysis works is extremely simple. You do the exact same thing every time. And we had a trade where on the 4-hour chart, it was making a higher low as compared to these two lows. This low here and this low here. This low here is a tad bit higher than this low here. And as price was moving, this candle here formed in 4 hours and had a higher low than the previous bar, and it closed higher than the close of the previous bar, which let me know that the market had a very good chance of continuing to the upside. So what we do is we dial down to our smaller time frame, which is the 30-minute chart, and we can see where price is getting above resistance here, where the top blue line is designated, and coming back down and failing to get lower. When I saw that, I was anticipating the market to then continue up for a period of time. It did continue up for a period of time, and we entered on our 5-minute chart here in this area here, and got in at 67.1, making 20 pips to the upside. So essentially what we did was we used our larger time frame, and as we were coming down to the smaller and smaller time frames, we were allowing ourselves an opportunity to make money to the upside with very little risk, or a lot less risk than necessary. So in this particular instance, this was an Aussie dollar trade that yielded us 20 pips with minimal risk, maximum return, and high probability for winning. Okay, that's the trade that we took on yesterday. Now, on to the topic for the day. And I just want to have open dialogue so that everybody will understand where I'm coming from. I asked the question, or I posed the statement that said, why most traders lose is not what you think. Well, simply put, the reason why most traders lose is lack of consistency. In the profession of trading and investing, consistency is the key to success or failure. If you have a lack of consistency, it's very difficult to be in this business. That's why I tell people you have to do the exact same thing every time. Find something that works and do the exact same thing every time. You don't deviate from it, because what happens is you skew your ability or your profit potential when you jump from system to system to system to system. There are a lot of different ways of trading, but there's really only one way of trading that works, and that's profitably. I've been trading price flow analysis for over 17, 18 years now, and I've done the exact same thing every time, except for when I'm experimenting, and 9 times out of 10, it doesn't yield the same results that price flow does. And that's really it. I'm not going to belabor the point. Whatever you're doing, if it's consistently yielding you profits, then stick to that and that only. Don't go peeking in everybody else's trading system, so to speak. Use the old adage, take care of what's in your house. Don't worry about what's in everybody else's house. And if your house is running smooth and like a well-oiled machine, then there's no reason to go looking for what's going on in somebody else's trading system. So these are just tidbits that I want to put out there. I'm going to open it up for open dialogue. If anybody has anything that they want to discuss, then we'll go from there.